day, all. Ira Epstein of Linn and Associates with your metals market update, and here we are on Tuesday, and this is the 26th of February 2019. We're about 2:40 p.m. Central Standard Time. This is not where you settled in these markets. You were actually a couple of dollars lower than this in the gold. The silver market certainly several cents lower than this. Copper about there. Platinum and palladium were the strong markets today. The help came from a lower dollar, and right across the board, all of the foreign currencies, the major ones, were up strong against the U.S. dollar, and at the same time, yields started falling as the bond and note yields fell. And if you were watching Fed Chair Powell, you saw his conversation, and he's just become very, very much into not a dovish camp, just data dependent. He didn't get asked what I thought were the right questions today. I thought it was pretty funny. He should have been asked more about how the balance sheet's going to bleed off and so on. But you get a bunch of politicians in with these, with the head of the Fed, and what happens is it's a political game, not a financial one. When I look at the gold market, you can see that we're getting a little bit of a correction here. The market finishing off right now for the week about $4 lower. Remember, you got to look on a weekly chart at the lead contract. When you look at a daily bar chart, look at how the volatility's come out of this market. You've just started going very much sideways right here. Now, the danger in gold comes if the market were to get under 1323.30, which it did not do today. For the day, the bulls won the day. It got into the 1425 area. I'm sorry, 1325 area, held it. As I said, the market did not finish higher, and that's because settlements come in at 12:30, but these markets trade until 4 o'clock, actually 4 o'clock Central Time, 5 o'clock Eastern. The pattern's still one of higher lows, but I've got lower highs. I have a market in no man's land right now. To get down to the 18-day average of closes, you have to challenge that old low. That'll be interesting. This number will climb a little bit tonight, and that's the good part of it. The problem that I have is on a seasonal chart, gold runs into a lot of resistance right at this typical time frame. If the market rallies from here by taking out 1335.60, you could end up, if you don't take out the low, with higher lows, higher highs, back into the uptrend. At that point, looking for the upper Bollinger Band. I say back into the uptrend because I still am stuck with the fact that I've got lower highs and higher lows. I call that nothing trend. When I look at momentum, I'm bothered. I come from the school where momentum often leads price. The word is not always, but it's often. That momentum's trying to drag down, and as I said, this market didn't finish higher today, so it is pulling on it. We'll see what goes there. You have a truer market in GLD because the stock market still has another 20 minutes to go before it's finished. It has the ugly picture of the gold here. You have the lower highs. Do you see that? You have the higher lows. Yes, the bias is up because you're over the 18-day average, but you have momentum down. Again, you'd have to take out the highs right through here, which were 125.95, and then you're only looking at 126.50 as the next resistance, but at least you'd have a pattern of higher lows, higher highs. Taking out 125.05, and you got to 125.06 today, would then confirm the lower high, lower low pattern, putting the 124.67 18-day average into play. The market that's been the weakest are the gold miners. They have the pattern of lower highs, lower lows. Unlike the futures or the GLD, you went down to the 18-day average for your test. Momentum is still pointing down. The trend is down, but the bias is up. So I have a market that's in the middle of no man's land because the market closed over that 18-day average of closes. In the gold-silver ratio, I've still got March silver up here. I'll switch over to May in a day or so. And today I made a switch over from March palladium into the June. You'll see that in a moment. But the one thing I am seeing is you've got these lower high peaks and you've got the higher low ones. It's not giving me a trend that I want. And as you can see, silver is stuck, very much so, at the 18-day average of closes. It does have a pattern of lower highs. Now it has a lower low pattern, and I think the settlement was just over 1592.10. I think it was closer to 1592.5, so the bias would be up. Start taking out this low of today and you could be in a trouble in the market wanting to pull back, might even make a run for that lower Bollinger Band. In theory, if it falls shy there, it'll just probably bounce around that 18-day average. In the copper, back up and what? Underneath the upper Bollinger Band, which is typical. Markets only stay 5% above it. But here's the power of this market. It's called the embedded reading. And when both numbers are over 80 for several days in a row or more, which it is, it means that on the pullbacks, they're typically shallow, unless the red line gets under 80. Barring that, they're typically shallow, and the traders are trying to use that to come into the market. Without that, you just say, oh, this market's dangerous. It changes nature if you understand that part. In the palladium market, you are overbought, running the upper Bollinger Band in an uptrend, and this market is paying back for having been so ugly when it was down here, but it's in a clear uptrend, and June palladium's in a clear uptrend, just like the March was. It's clean as can be, and it has the embedded reading, unlike platinum, which is simply overbought. Still the strongest, as I see it, of the metal markets, and it's been palladium versus the world, basically, if you're a metal trader. Today in the dollar index had gotten back to the 18-day average. It had a pattern of lower highs and lower lows, but if you look at the settlement, yesterday it settled just under that 18-day average, so it gave the bias down and momentum was down. If the market's going to continue, next stop could be the 100-day average, which is right here, and if it continues from here, then we get starting to play out the 95.45 level. But what I think you did in this market is you convinced people today they want to be on the bear side on rallies in the dollar index. What probably kept some of the trade away was the market got itself very oversold. And when I look at trends, if you think I don't look for tools to tell me, gee, is that got momentum locked in? What's it doing? There are different indicators you can use out there. A popular one's called an Arun indicator. And what this does, the theory of this is really looking at the recent period of time between highs and lows. So it's going to trade between 50 and 100. Went up above 50, the Arun indicator. The down one would be below 50, and you're looking to graph these two things out on a chart. It's the difference in time between the indicator, and we show you how to plot it. Just about most of the serious charting services, they'll carry this indicator. And it will end up looking like this. And it's a measurement from the break lows, new highs, from there to new highs in the market. And once you see the pattern develop, you're realizing, hey, here's something that's telling me, is the market's moving up on a chart or down on a chart, it's trending because it's doing it within X periods of time. That is, I'm giving you the simplistic part of what Arun is about. It's time related to new highs or new lows. And I think it's actually a pretty important tool to learn to use with all that. So if you put it there and you want another tool for your, what I call your treasure chest of things that you use, it's really simple. Simply give us a call. 866-973-2077. You can go to our website, www.iraepstein.com, and when you go there, you'll see all of our free offerings. You see all that information right here. You can click here if you're watching. It'll take you right to our front of our website where you sign up for things. I'm Ira. Have a good day.